Hey guys, Kyle here. In this video, you will learn exactly how to apply for a business loan in 2025, step by step. We'll cover two methods in this video. The first of these is going to be using Mercury's platform, which is a super popular small business bank that you can use to get your very own small business loan extremely easy and, more importantly, extremely quickly. We'll also be covering the DIY approach of doing this by applying directly with a bunch of different banks and other lenders. This topic is important because having access to capital can make the difference between seizing a big opportunity or, more importantly, struggling with cash flow as a business owner. Whether you're just starting a company or you already have revenue coming in, understanding how to get funding is crucial to fuel your growth or cover essential expenses. By the end of this video, you'll know what to expect, how to maximize your chances of approval, and how to get that business loan as quickly as possible. So without further ado, let's get started. Now, before diving into this how-to, let's talk about what to expect when you apply for a business loan. This process can take anywhere from a few days to a few months depending on the type of loan and the lender that you're getting the loan from. So ultimately, you need to be prepared for that kind of timeline. You'll need to gather some essential documents and information before you even start this application process in the first place. Make sure to get things like your financial statements, your bank account records, tax returns, and possibly a business plan. So it's highly recommended that you get organized early. Also, be realistic about how much you can borrow from them in the first place. Lenders will compare the loan amount to your business's income and cash flow to ensure that you can make those payments on time. If your business is brand new or not yet profitable, expect that you might start with some smaller loan options or even be asked for a personal guarantee. And finally, know that almost every lender will check your credit, both your business and your personal credit, and there may be a bit of back and forth to clarify that information. Patience and preparation here will just make this journey so much smoother. So first things first, here's one of the easiest ways to get a business loan as quickly as possible with the least amount of effort up front. You're going to be doing this by applying through what's known as Mercury. Mercury is a financial institution, more specifically a small business bank that offers tons of different built-in loan options for small business owners and even startup companies. If you already have a Mercury account, it's completely free to open. If you don't, you can log in to your dashboard and go head over to the capital or loans section to begin the application process. If you guys don't have a Mercury account, I'd highly recommend getting started with one by using that link down in the description. When you click that link, you should be brought to this page right here. As you can see, we simply just have to enter in our email address, open an account, and just like that, we'll pretty much be ready to go inside of Mercury. We'll answer a couple of questions in their onboarding process, and you're pretty much ready with your very first business checking account. Now, once you're inside of your business banking dashboard, the system will walk you through a short eligibility questionnaire. A good example of this is that Mercury offers venture debt for VC-backed startups and working capital loans for e-commerce businesses. So it will ask you questions like whether your company has venture investors or how much revenue you're generating as a firm. Basically, you'll just answer a few quick questions about your business, such as your industry, revenue, or funding history. And ultimately, if you meet that criteria, Mercury's platform then asks you to connect your financial accounts or upload key documents instead of making you fill out those lengthy forms. Once everything is submitted, their underwriting team reviews your info, and you typically get a decision within just a couple of business days. If you're approved for this, Mercury presents you with a team sheet outlining the loan offer. This will contain things like the loan amount, fee, or interest rates, and even the repayment schedule. Once you accept those terms and sign the agreement digitally, the funds will be deposited directly into your Mercury business bank account. Once that's done, you'll then have a loan dashboard in Mercury where you can draw down the money as you need. You can see also your repayment schedule and ultimately manage everything from one centralized location. One big plus with Mercury's loans is that they usually don't require any personal guarantee or even better collateral, which is pretty rare and makes the process much more founder friendly, especially if your business isn't producing a profit yet. For businesses that do fit Mercury's criteria, this integrated approach can save a lot of time and hassle. If Mercury isn't an option for you, don't have any worries. You can still get a loan by applying the traditional way, which is what we're going to be covering next. If you don't want to use Mercury, the next logical step here is going to be applying with the DIY approach, which is basically going to involve you going from bank to bank, lender to lender, and basically asking them for money, giving them a full pitch on what your business is, how it works, as well as any important financial metrics. And basically this means that you'll be doing a ton of your own research, reaching out to banks, credit unions, or even online lenders completely on your own. You can start doing this by figuring out what type of loan you're going to need and which lenders offer that kind of financing. One of the best examples I can give for this is deciding whether you're looking for a long-term loan, a lump sum you pay back over a set time, or a business line of credit, which are basically just like flexible funds that you can draw as needed up to a certain limit, or even an SBA 7 loan, which is going to be a government-backed funding loan for small businesses. These were very popular during COVID times, but in more recent era, these aren't really as given out as easily. Once you know the type of loan, you're going to go ahead and identify potential lenders. You might begin with your local bank or credit union, especially if you already have a business account there. There's also the option of checking out online lending marketplaces that can ultimately connect you with multiple loan providers all at one time. One of the other steps you can do is be prepared to fill out applications detailing your business's information and finances. And of course, be prepared to fill out many of those applications. You're going to be applying anywhere and everywhere. That way you have even a slim chance of getting approved for some kind of business loan. Every lender's process here will be a bit different. A traditional bank might ask you to meet with a loan officer and submit a huge stack of paperwork, while an online lender will have you fill out a web form and upload documents completely electronically. In either case, you'll typically need to provide supporting documentation such as your recent bank statements, tax returns, financial statements. This includes something like a profit and loss and a balance sheet, which you can get with something like QuickBooks. Once again, that will also be linked down in the description, and possibly a business plan or sales projections if your business is brand new. After you apply, the timeline for approval here can vary pretty widely. Some online or alternative lenders might give you an answer and even funding within just a few business days, whereas a bank or an SBA loan can take several weeks to process due to the stricter underwriting and paperwork. The key with the DIY method here is persistence and comparison. It's obviously very beneficial to apply with a few different lenders if you can. That way you have options that you can choose from. Also, there's the plus of if one lender says no or offers less than ideal terms, you might find a better offer elsewhere. This approach does take quite a bit more legwork on your part, and that's one of the main reasons why I would definitely recommend going with a platform like Mercury, which is what we discussed at the beginning of this video. Once again, if you guys are interested in getting signed up with them, make sure you use that link down in the description. Hopefully you guys enjoyed this video. Please comment down in the comment section what you guys think about Mercury and if you've ever had experience with getting your own business loans. I always love to know what you guys are thinking about, and ultimately if you guys have ever done some of this stuff. Hopefully you guys enjoyed this video though, and I can't wait to see you guys in any of our future videos.